Sands Capital was founded in 1992 by Frank Sands Sr., who developed our philosophy, process, and 6 criteria, but probably most importantly, set the tone for our culture. Every aspect of our culture is geared towards delivering on our mission to add value for clients with prudence over time. In order to do that, we know we need to maintain a client-centered culture, a research-driven, analyst-first, fun, dynamic place. And that's exactly what Sands Capital is. And we really think it's one of our biggest competitive advantages and differentiators in the investment industry. At Sands Capital, we feel like we've really only ever done one thing, which is to be active, long-term investors in leading growth businesses on a global basis. We do this primarily through a US strategy, a global strategy, and an emerging market strategy, both within the public and private markets. Most of our clients are very large, sophisticated institutions, such as pension funds, endowments, foundations, and sovereign wealth funds, located in 40 countries across the world. All of our strategies are considered concentrated, but we also manage a family of super concentrated strategies, which we've been doing since 2008. Sands Capital has a singular focus on growth investing. The fundamental premise that we subscribe to is that over time, stock prices follow the trajectory of a business's earnings growth. Therefore, we're looking for businesses that are innovating, disrupting huge new markets, and literally creating the future, layering on new growth drivers, and in so doing, achieving and sustaining that above average earnings growth for 3, 5, 7, and 10-year periods in some cases. There are very few businesses that can actually do that. That's where we spend all of our time and energy, looking in the key growth spaces in the global economy and identifying and then owning the few truly exceptional businesses. It's really more like a private equity mindset applied to the public markets. Our process is to deeply understand businesses and business spaces. Consistent with our culture, we have a team approach, industry expert analysts typically doing the research alongside PM teams, meeting with management teams, customers, competitors, really trying to understand the value chain and where the choke point opportunities and leaders are. Once we do all that, a small team of people usually gets together for a vetting process, and it's usually more of a weighing contest between things that we already own and new businesses that we could potentially own. Ultimately, we're driving towards high conviction among the thought leaders in that small group to own a handful of the leading dominant businesses in the world. ESG has always been a part of Sands Capital's investment process, really through our 6 criteria, which have typically led us to companies with strong environmental, social, and governance practices. It wasn't called ESG 10 years ago, but now that it's more of a formally defined practice, we've applied a lot of tools and dashboards to make sure that we're tracking and the companies are doing what we think they should be doing from an ESG perspective. The guiding principle for us is that we view ourselves as stewards of our clients' capital. And as a result, we're simply looking for companies that are also good stewards of their financial and non-financial assets, as well as the environment around them. While Sands Capital are not activist investors, we do actively engage with all of the companies that we invest in. In fact, we've come to be known as kind of thought leaders in the ESG space, and companies often engage with us to understand best practices around environmental, social, and governance issues. Concentration is actually in Sands Capital's DNA. It's one of our foundational principles. Because of our criteria, we're really only looking for a few truly exceptional businesses, and that leads to concentration. We believe in making high conviction investments. We've been doing that for a long time, and in fact, we've been managing a family of super concentrated portfolios since 2008. We've learned a lot of lessons along the way. We've applied those learnings and now have a sustainable, repeatable process that's been proven to work in the past, and we think will continue to work and add value to the future. In a nutshell, that process revolves around focusing on the best businesses that we know about firm-wide and owning them in bigger weights in the super concentrated portfolios. By best businesses, we mean the strongest fits with our 6 criteria. In doing this for over 13 years, we found that these strategies have done about what we've expected them to do. They are among the best performing strategies we have at Sands Capital. Actually, the power of this strategy, at least the way that Sands Capital approaches it, is more in the overall research platform. We don't have a star PM system. If anything, the analysts and the other PM teams for our flagship strategies are the stars. We're really trying to filter the highest conviction ideas from throughout the organization into these more concentrated strategies. And then we apply some common sense principles around portfolio construction to make sure we're not getting overexposed to any geography or industry or risk factor exposure or any other way that you want to slice and dice the portfolio. Importantly, to do all this right, you need to have the right kind of culture in your organization, really an analyst first orientation, as well as a unified investment philosophy, and even a compensation system that rewards contributions to these super concentrated strategies across the firm. Ultimately, our edge comes from our unwavering commitment to our philosophy and process that leads us to this long-term orientation and preference for concentration, as well as a focus exclusively on growth investing as opposed to any other styles. As concentrated investors, we're not trying to cover everything, only the areas that matter to us. We don't think we have an information advantage over other investors, but by leveraging the domain expertise that we've built over years, as well as pattern recognition and other things, we feel like we've got an understanding advantage. And a lot of that just has to do with our extreme long-term orientation. While other investors might be focused more on the next month or the next quarter or even the next year, we truly are focused on how a business could and should look 3, 5, and 10 years from now, and how large, committed, long-term shareholders like ourselves could benefit from that. Furthermore, we understand how and have seen through experience how these disruptive business models can capture much larger market share, which with much greater profitability than shorter term oriented investors can appreciate. And really, that's one of the secrets to long-term wealth creation through investing in concentrated portfolios. All of Sands Capital's flagship strategies have been able to add significant value in both an absolute and relative sense for long periods of time. We've been through periods of disruption before, whether it was the global financial crisis in 2008, 2009, or the dot-com bubble bursting coupled with 9/11. COVID has been a different disruption, but a lot of the patterns are the same. Typically, the strong companies get stronger, the weak companies get weaker. The secular trends that are already in place accelerate, and they don't go back, they don't step function back down. And the stocks of the leading companies in each of those areas tend to do much better. And that's what's happened to us throughout our history, including recently during the COVID crisis. Sands Capital has a long history of identifying durable secular trends early in their life cycle, as well as separating out the truly sustainable trends versus the fads and avoiding the fads. 10 years ago, that was, in software, the transition from shrink wrap software to software as a service. Nowadays, it's things like e-commerce and streaming media. One area to dig in on in a little bit more detail is the digital revolution occurring in financial services, where software is really overtaking hard infrastructure like bank branches and other things. And the great thing is, it turns out that it's cheaper, better, faster, less risky, and more efficient. Of course, Visa is a good example there, a business that we've owned for a long time, since its IPO at Sands Capital, and we've owned it since inception of these super concentrated strategies over 10 years ago. It's really laying the infrastructure for a lot of digital payments to occur, and then charging a little toll every time that happens with a very benign regulatory and competitive environment, almost an oligopoly, which is something we really like to see. More recently, a company that's built an amazing growth business, somewhat on the rails of businesses like Visa and other credit card networks, is Square, which most people are probably familiar with. Started with little payment dongles for small merchants like food trucks, and has actually leveraged that position into two very potentially attractive markets. One is additional financial services for those merchants, things like small business loans and inventory loans. And then for the merchants' customers, in other words, individuals, they've created Square Cash, which has rapidly become one of the leading peer-to-peer as well as individual to merchant payment platforms in the world. We at Sands Capital really believe that we are in a golden age for growth investing, particularly focused on innovation and disruption. There's no doubt that the pace of innovation around the world is increased, and a lot of that's been enabled by technology. These companies, they can just scale much faster than they ever could before on a global basis, and really take whole markets and settle into their natural leadership positions much more quickly than was ever possible in the past. All of that, coupled with what feels like increasing short-termism and risk aversion in the markets, is all opportunity for long-term business-focused investors in disruptive business spaces, particularly in concentrated portfolios. So we're excited as we've ever been in the space, And we see a lot of opportunity in the short term, but especially in the long term.